Welcome to Friday Market Insights. My name is Jill Bester, and I'm an Associate Portfolio Manager with Genis. And today I'm joined by Justin Hahn, who is our Macro Research Analyst. Good morning, Justin.
Morning, everyone.
Why don't we start off this week with what's happened in the markets?
Yeah, so this week was a quiet week with a lot of the equities and bonds remaining relatively flat for the year. A lot of the movement, there was lots of volatility earlier in the week, but in the end of the week, everything came back to where it was roughly at the start of the week. The biggest underperformer we saw was in the Russell 2000 index, which is the small cap index, and the biggest outperformer was actually in the foreign exchange, with the US dollar rising 1%. A lot of this is due to the disparity between the US and the rest of the world in terms of the vaccine rollout. So there's more optimism in the US. But come summertime, we believe there's going to be an oversupply of vaccines, which will help other countries out, especially in Europe and including Canada as well.
Right, exciting news. Just this morning, Anita Anand, the Minister of Procurement, announced that we would have 6 million additional vaccines in the next 3 to 4 weeks, which equals what we've had in the last 3 months together. And I know a lot of my clients have had their shots this week, and my parents are on the list. So it's exciting and optimistic times ahead. One of our questions came in. Our clients obviously have seen some volatility in the past few weeks. What could drive the market significantly higher from here for the rest of the year was a question that came in.
So we believe that stronger economic growth, as well as reopening of the economy and continued vaccine rollout, will be the major players in terms of higher markets. There's still a lot of pent-up demand from the lack of spending that we saw in 2020 and bigger tax benefits for a lot of the consumers. So that's going to help out once the economy reopens and travel and other activities resume again. In particular, we believe more of the value stocks and the economic recovery names continue to outperform this year as it did earlier in the year.
Right, we've talked a lot about momentum versus value. Can you explain to our clients what this means and how we have repositioned the portfolio?
Yeah, so momentum stocks are generally stocks that have done well for a certain period of time, usually a longer period of time. And in this case, it tends to be more of the COVID winners, as we say, such as a lot of the technology names that we saw, such as Tesla. Tesla in particular, it did extremely well into the recovery. And we actually have a blog post about it on our website and the impacts that they have had in the impact space as well that you can view. While on the other hand, we saw value stocks are more of the ones that underperformed and are trading at below their intrinsic value, whether from a price to book or a price to earnings standpoint. And a lot of these names are what we call the COVID losers. They're more of the economic sensitive names, such as the industrial sector or the materials sector. And we have seen more of a rebound there. So we began to tilt more of our portfolio around the end of last year when the vaccine rollout was more evident, and will continue to as long as we see more economic recovery momentum happening.
Right. On another front, bonds are down 3 to 6% year to date. What do we think will happen from here, and what are the biggest risks going forward in the fixed income market?
Yeah, so with the recent upwards movement in bond yields, we saw bonds return back to more of the pre-COVID ranges of about 1.5 to 2% for the US 10-year in particular. We expect interest rates in the shorter term in this year probably maintain that range-bound scenario. Currently, what was happening was the investors were more pricing in earlier rate hikes than expected. The current market is pricing in about the first rate hike to be in 2023 versus the US Federal Reserve, which has a dot plot, which projects the first rate hike to be about 2024. So they're way more optimistic on when the first hike will be and the economic recovery compared to the Fed. And we think that they're overestimating a bit and they're underestimating the Fed's abilities to be patient. Back in 2018, we saw the US Federal Reserve raise rates 4 times. And that was way too fast. So they had to halt and actually lower the rates soon after because they went too fast and were too aggressive with raising rates. And we think that the Fed has learned their lesson and will be more patient going forward. The biggest risk to current bondholders obviously is the inflation risk, because a higher inflation means that the US Federal Reserve will raise their interest rates, which will lead to higher rates and lower prices for bonds for current bondholders. And that's the biggest risk we see. But again, as mentioned before, we believe the market is overpricing the rate hikes and underestimating the Fed's ability to be patient. So the Fed has also come out and said that they're explicitly going to wait until inflation hits 2% for at least a few months, so then they have more confidence in order to raise rates.
Right. Other news, obviously, Freeland has announced that April 19th will be the budget after 2 years. It should be interesting to see the government's fiscal policy moving forward. Do you have any thoughts or expectations there, Justin?
So regarding the fiscal budget, there's obviously, it was released, but we don't know if it's actually going to be approved or not. The biggest risk we see is the Liberals not being able to get another party on board in order to approve it. And then that will lead to a snap election and more uncertainty for the markets. But we're optimistic about it. But I guess it's just a wait and see moment now.
Right. So should be an interesting April, that's for sure. On some other news, CP Rail is one of our holdings in our CanGlobe Fund, made the news this week with the acquisition of Kansas City Southern Rail. It is thought that this is a response to the pipelines being canceled by Biden as an alternative energy transport route. What are your thoughts on this acquisition for the company?
So we view this acquisition as beneficial for CP Rail as a whole. It allows them to access more of a broader market in the US and transport the oil. They are one of the biggest oil transporters in Canada, so this will help them out. Including this, they also have a big portion of transports for automobiles, and the Kansas City Southern also connects the Midwest all the way down to Mexico, which is the current CUSMA agreement that we have. And this is also beneficial from that front as well. Demand for railways are always high, especially in Canada and the US, and we believe that it will continue to remain high throughout the economic recovery taking place.
Right, right. Justin, I'm just going to ask you one question that was posed to me by my client in regards to what exposure do we have in the AI and robotic sector, if any? Obviously, we have Tesla, we've referenced, I know we have Microsoft. Where are we in that space?
So in terms of direct exposures for companies that are doing direct AI, it would be companies such as Microsoft and NVIDIA, which have direct exposures in more of the AI space. And we do own those stocks and see it as a growing space going forward. But a lot of the technology sector actually has a lot of AI built into it. You wouldn't think, but a lot of social media companies, per se, have a lot of different machine learning and AI techniques to predict what you will like or give you suggestions or also do targeted ads. So the world is turning into more of an AI-centric place. So no matter what you're invested in, there's probably some form of AI already in there.
Well, that's great insight. I thank you again, Justin, for joining me today. I'd also like to thank our customers and our prospective customers for joining us. We love your input. Please, if you have any questions, just hit the ask a question button on the bottom of the link. We'll try to get back to you as soon as we can. And we hope you're all staying well and safe and enjoy a beautiful weekend. Thanks for joining us.
Thanks, everyone.